If you are collecting the Canada Pension Plan, Old Age Security, or the Guaranteed Income Supplement, February 2026 is a month you absolutely cannot afford to ignore. This is not just another routine month where money arrives in your bank account. Service Canada and the Canada Revenue Agency are implementing significant changes to how tax data is processed, directly impacting the automatic renewal of your benefits. With the expansion of the CRA's automatic tax filing services, aimed specifically at lower-income seniors, understanding these new protocols is essential to ensuring your payments continue without interruption. Today, we are breaking down exactly what the new CRA rules for 2026 mean for your retirement income. There has been a lot of confusion regarding automatic payments, and it is critical to separate fact from fiction. The reality is that the CRA is expanding its Simple File automated service, which is designed to help seniors file their taxes quickly and easily. This is the mechanism that triggers your benefit renewals. If you do not understand how this automatic filing system works, or if you assume it applies to you when it does not, you risk a suspension of your guaranteed income supplement in July. In this video, we will cover the specific eligibility for automatic filing, the critical documents arriving in your mailbox starting February 1st, and the exact steps you must take to secure your CPP and OAS amounts for the coming year. We will also discuss the income recovery tax thresholds that are determined by the paperwork you process this month. By staying proactive, informed, and organized, you can ensure you receive every dollar you are entitled to. Let's dive straight into the details. It is essential to understand that when we talk about new rules for 2026, we are primarily discussing the CRA's aggressive expansion of the Simple File service. For years, seniors have struggled with the complexity of tax returns, often paying third parties to file simple returns just to keep their GIS benefits active. Starting with the 2026 tax season, which covers your 2025 income, the CRA is widening the net for who qualifies for automatic or simplified filing. Here is how it works. Starting in February, the CRA sends out invitation letters to eligible Canadians. If you receive this letter, you are eligible to file your return simply by confirming your information over the phone or through a secure digital portal. You do not need to fill out complex forms or hire an accountant if your situation is straightforward. This is what many are referring to as automatic payments, because completing this simple step is what guarantees your automatic benefit renewal in July. However, and this is the most crucial detail, this system is invitation only. You cannot simply assume you are enrolled. If you do not receive an invitation letter by late February, you must file your taxes the traditional way. Relying on an invitation that never arrives is the #1 reason seniors see their GIS payments stop abruptly in July. The CRA is targeting this program specifically at seniors with a modest income and a simple tax situation. Simple generally means your income comes primarily from T-slips, like the T4AP for CPP, the T4A OAS for Old Age Security, and perhaps some interest income on a T5. If you have capital gains, rental income, or self-employment income, you will likely not qualify for this automatic service and must file a standard return. It is important to remember that even if you use Simple File, you are still responsible for the accuracy of the information. The CRA uses data they already have on file to calculate your return. When you call the automated line, you are essentially verifying that their data matches your reality. This process takes minutes, but it is the linchpin of your financial stability for the entire year. February 1st, the critical trigger date. February 1st marks the beginning of the most critical administrative period for Canadian seniors. While your monthly payment dates are fixed, February is when the documentation required to keep those payments flows into your hands. By the first week of February, you should begin receiving your tax slips for the previous year. Let's break down the specific documents you need to watch for. First, the T4AP Statement of Canada Pension Plan Benefits. This slip details exactly how much CPP you received in 2025. It is not just a record, it is a taxable income statement. Box 20 on this slip shows your total taxable CPP benefits. If you had tax deducted at the source, That will appear in box 22. It is essential to verify these numbers against your bank deposits. Errors are rare, but they happen, and an error here can affect your GIS calculation later. Second, the CPP OAS, Statement of Old Age Security. This document is even more critical for low-income seniors. Box 21 shows the net supplement paid. This is your GIS. Why is this important? Because your guaranteed income supplement is non-taxable, but it must be reported to determine your eligibility for future payments. If this slip is missing or incorrect, your renewal in July will be jeopardized. Third, if you have a private pension or RRIF withdrawals, look for your T4A slips. These are often the last to arrive, sometimes pushing into late February. Why is February 1st the start date for this urgency? Because the CRA's Auto Fill My Return service opens later in the month. If you have your paper slips organized early, you can cross-reference them with what the CRA has in their system when you file. If you have not received these slips by February 28th, you must take action. Do not wait until April. Contact Service Canada immediately to request duplicate slips. The delay in filing caused by missing slips is a primary cause of benefit interruptions. Mark this timeline on your calendar. Slips arrive in February, filing happens in March or April, and benefits renew in July. The clock starts now. CPP and OAS, Payment Mechanics and 2026 Adjustments. Let's shift focus to the payments themselves. While we discuss filing and paperwork, you still need to manage your monthly cash flow. For February 2026, the payment dates follow the standard protocol, but the amounts include the adjustments that took effect in January. It is important to remember that CPP and OAS are indexed differently. The Canada Pension Plan is adjusted annually in January based on the Consumer Price Index. The increase you saw in your January payment is the new baseline for February and the rest of 2026. This is a permanent increase designed to protect your purchasing power against inflation. Old age security, on the other hand, is reviewed quarterly. The amounts for January, February, and March 2026 remain consistent. The next potential adjustment for OAS will not occur until April. This means your February payment should be identical to your January payment, barring any changes in your personal tax deductions. For those aged 75 and older, your OAS pension includes the automatic 10% boost introduced previously. This is not a new rule for 2026, but it is a permanent feature of the system. If you turned 75 in January, your February payment will be the first to reflect this increase. It happens automatically. You do not need to apply for it. However, we must address the net payment concept. Many seniors are surprised when their February payment is slightly different than expected due to tax withholding. If you requested voluntary tax deductions from your CPP or OAS, those are calculated based on the new, higher indexed amounts. Sometimes this pushes you into a slightly higher withholding bracket, resulting in a net deposit that doesn't seem to rise as much as the gross amount. Check your direct deposit statement carefully. Compare the gross amount, the amount before taxes, to the official rates. If the gross amount is correct, then the system is working as intended. If the gross amount is lower than expected, that is a red flag that requires a call to Service Canada. The Guaranteed Income Supplement, GIS, the vulnerable link. This section is the most critical part of this video. If you receive the Guaranteed Income Supplement, your financial stability hangs on the actions you take between February and April. Unlike CPP and OAS, which are largely guaranteed once you qualify, the GIS is an income-tested benefit that must be renewed every single year. The new CRA rule regarding automatic filing is essentially a safety net for GIS recipients. The government knows that thousands of seniors lose their GIS every July simply because they forgot to file a tax return. By expanding Simple File, they are trying to close this gap. But here is the danger. Do not become complacent. The GIS is calculated based on your family net income. This means if you have a spouse or common law partner, their income information is just as critical as yours. Both of you must file your returns on time. If one partner files and the other does not, the GIS calculation halts and payments stop. For February 2026, your GIS payment is still based on your income from 2 years prior. You are currently in the payment cycle that runs from July 2025 to June 2026. The tax return you file this spring, based on the slips arriving in February, will determine your GIS payments starting in July 2026. This lag time is why confusion occurs. You might have had a change in income in 2025. Perhaps you withdrew a lump sum from a RRIF or sold an asset. That extra income will not affect your current February payment, but it will trigger a reduction or elimination of your GIS come July. It is essential to understand that capital gains and RRSP withdrawals are considered income for GIS purposes. TFSA withdrawals are not. This distinction is vital. If you are planning your finances for 2026, knowing which income sources reduce your GIS is key to preserving your benefit. If your income dropped significantly in 2025 compared to 2024, and you are struggling right now, you do not necessarily have to wait until July for an adjustment. There is a provision called an estimate of income that you can file with Service Canada if you have had an involuntary loss of income. However, for most seniors, the standard process applies. File your taxes in March and your GIS updates in July. The OAS recovery tax, the clawback thresholds. For higher income seniors, the concern is not qualifying for GIS, but keeping your old age security. This is known as the OAS recovery tax, or commonly, the clawback. The income thresholds are indexed annually. For the 2026 tax year, based on 2025 income, the threshold where OAS begins to be reduced is significantly higher than in previous years due to inflation adjustments. If your net world income exceeds this threshold, you must pay back 15 cents for every dollar over the limit. Why discuss this in February? Because this is the month you can take action to minimize that clawback for the current year. If you are close to the threshold, look at your income sources. Can you split pension income with a spouse? Pension income splitting is a powerful tool that can lower your individual net income below the recovery threshold, saving your OAS payments. When you file your taxes this spring, you make an election to split eligible pension income. This transfers up to 50% of your eligible pension income to your spouse's return. This does not change the total money coming into the household, but it equalizes the income between partners. This can save thousands of dollars in OAS recovery tax. If you are already in the recovery tax zone, the CRA will automatically deduct the recovery tax from your monthly OAS payments starting in July 2026. This is often a shock to seniors who see their deposit drop significantly mid-year. By calculating your income now, in February, you can predict this drop and budget accordingly. It is important to remember that the recovery tax is calculated on your individual income, not family income. This is the opposite of the GIS. This structural difference is why strategic tax planning, like pension splitting, is so effective for preserving OAS, even if it doesn't help with GIS. Your action plan, step by step. Now that we have covered the rules and the risks, let's outline a concrete action plan. Take the following steps to ensure you receive the correct amounts and avoid interruptions. First, log into your My Service Canada account, MSCA. If you do not have one, February is the time to set it up. This portal allows you to view your T4A slips online often before they arrive in the mail. It also shows you the exact dates and amounts of your upcoming payments. Second, verify your direct deposit information. The CRA and Service Canada are moving almost exclusively to digital payments. Checks are slower, prone to theft, and can be delayed by postal disruptions. If you are still receiving a paper check, go to your bank this week and ask them to help you set up direct deposit. It is faster, safer, and more reliable. Third, watch your mail for the Simple File invitation. If you receive a letter from the CRA in February inviting you to file by phone, do not throw it away thinking it is junk mail. It is your ticket to a 5-minute tax filing process that secures your benefits. Read it carefully and follow the instructions. Fourth, if you do not receive an invitation, gather your T-slips and make an appointment with a tax preparation service or a community volunteer tax clinic. Many community centers offer free tax filing for seniors with modest incomes. Do not pay for a service if you qualify for free help. You can find these clinics listed on the CRA website under the Community Volunteer Income Tax Program. Finally, check for deductions. When you receive your February payment, look at the stub or online statement. Is tax being deducted? If you find you are owing money every April, you can ask Service Canada to increase the tax deducted from your monthly CPP and OAS. Conversely, if you are getting a huge refund every year, you might be giving the government an interest-free loan. You can reduce the withholding to put more cash in your pocket every month. The new CRA rules for 2026 are not about changing the fundamental promise of the Canadian pension system. They are about modernizing how you access it. The shift toward automatic filing is a positive development that will save thousands of seniors from losing their benefits due to paperwork errors. However, automation only works if you are informed enough to participate. February is the preparation month. It is the month where you gather the evidence of your financial life, your T-slips, and prepare to report to the CRA. By understanding the connection between the slip you receive in February and the payment you rely on in July, you take control of your financial security. Do not let the paperwork overwhelm you. Take it one step at a time. Watch for your slips, look for the simple file invitation, and ensure your direct deposit is active. These strategies not only protect your current income, but also help secure your financial stability and peace of mind for the future. If you found this breakdown helpful, consider subscribing to the channel so you never miss an update on Canadian retirement benefits. Stay proactive, and I will see you in the next video.